Hi everyone. In this video, I'll be teaching you guys an SMC strategy that is easy to follow. And if you have been finding it difficult to understand price action and you have been finding it difficult to have a trade plan, in this video, I will be teaching you guys a step process for you to have your own personal trade plan that you can easily replicate multiple times for you to have a good advantage in the market. And this strategy is one of the easiest strategies you can find on the FOREX Trading Empire 2025 mentorship program. I'm breaking out this strategy personally so that I can teach you guys going next day so that you can understand and learn how to apply it correctly and have a trade plan and a guideline to protect you for you to trade this strategy correctly. Because executing a trade plan takes a whole lot of work for you to understand how to execute a trade plan the right way, understand when the bias is fully aligned, and understand that the lower time frame is ready to give you an entry. While in this video, I'll be breaking it down, telling you guys the steps for you to follow, for you to build up the trade plan, for you to trade the SMC strategy. And to me, this will be the only strategy you'll be needing. If you learn how to apply it correctly, this is the only strategy you will need going next year. Before I start, make sure to like and subscribe to the YouTube channel. Now, this strategy is going to be very easy. If you have watched through previous video, I talked about how I determine my bias, how I told you guys that you can trade with only 2 time frames if you know how to do it correctly. And in this SMC strategy that I'm going to be teaching in this video, we'll be covering that using only 2 time frames. But you can choose to use more time frame to it, but the strategy is based on 2 time frame. And when I get into how you can use the 2 time frame, you will understand why I say that you can only use 2 time frame if you wish to use 2 time frames to trade this strategy and you plan to add it to your trade plan. So first, for you to understand this strategy, you need to understand what are the points of interest we will be focusing on. The POIs we're going to be focusing on is going to be the specific POIs for you to look at price to use as a resistance area or as a support areas. Those are specific points of interest for you to look for price to develop from those points of interest for you to take advantage of any trade setup. And there are specific trade setups that we'll be looking for, and there are specific points of interest that we'll be focusing on. We're not trying to use multiple time frames, so which means we have a specific point of interest that we will be paying attention to. And when those points of interest present us with a trade idea, those are the times we take advantage of those trades. Second is how to define your bias. After understanding the point of interest that you will be using to take advantage of, how to define your bias is very important. You are using those points of interest to define your bias to know if you are going to be anticipating higher prices or you will be anticipating lower prices and what is your draw on liquidity. So understanding the point of interest is very important so that you can define your bias easily and understand where you are trading to and what is your next draw on liquidity. Second is the lower time frame entry pattern. Now, the reason I say entry pattern is because you need to wait for a specific pattern, like a shift in structure from the lower time frame, a shift in structure, a change in character. They're still the same. You just need to see the trend align with the higher time frame bias. So it's like a pattern. You need to see that shift in structure before you actually take advantage of the trade setup. So whenever there's a shift in structure and you are anticipating price to trade to that direction where price is fully aligned with the price action trading to that direction, those are the times to take advantage of your lower time frames entries. So let's talk about the points of interest. Now, the major time frame we're going to be using is going to be the daily time frame for our bias. This is the time frame we decide on where we will be trading to. And this is the time frame we mark out our point of interest. And the 1 hour is the time frame we're going to be using for an entry. Going in, after we explain up the process for you to use to take advantage of this trade setup, I will be showing you guys an example from a recent trade I took on GBP USD. First is the daily fair value gap. Looking at your daily chart, you need to know which fair value gap is below the current price and which fair value gap is above the current price. and which fair value gap is price we're expecting, and which fair value gap price have failed. Understanding how to trade using the idea of a fair value gap, understanding where is a fair value gap, which fair value gap will hold, which fair value gap price will trade to, which fair value gap price will invert to an inversion daily fair value gap. So the second point of interest is an inversion daily fair value gap. Knowing which inversion fair value gap price we use is very important. Next is the daily order block. Understanding the daily order block. I've talked about the daily order block for a while in the live top-down analysis. For those that have been going through the live top-down analysis, I talked about daily order block. I've talked about the key points on how to trade this specific SMC strategy on live top-down analysis, because the live top-down analysis is based off this trade idea. It's based off this trade plan. Learning how to trade the SMC with the daily and the 1 hour time frame. Those are the major time frame I do use on the live top-down analysis review and on the live top-down analysis. For those that have been going through those lectures, I will be breaking down the strategy in this video so you can understand how I came about those trades that I've been showing you guys for around 7 weeks now, and how you can take advantage of it going in next year. Next is the daily swing high and swing low. Understanding the recent swing high, understanding the recent swing low, understanding the next draw on liquidity is very important. Knowing your swing high and your swing low, this will help you to determine your bias. This will help you to determine the trend of the current price action. Next is the daily buy side liquidity. You need to know what's the current buy side liquidity above the current price action, and what is the daily sell side liquidity below the current price action. Now, equal highs and equal lows are one of the most important areas on the daily charts. When the daily chart is identifying an equal high and there's a draw on liquidity where price is retracing to that equal high, those are strong and high probability setups. So in this daily time frame, this is the time frame we're going to be using this point of interest to determine our bias. We'll be marking out the daily fair value gap, the daily inversion fair value gap. If there is an inversion fair value gap, we'll be marking the daily order block, the daily swing high and swing low, the daily buy side liquidity and the daily sell side liquidity, and marking out if there is any equal highs or equal lows close to the current price action. We'll be marking out those equal highs and equal lows. After marking out the point of interest correctly, this will give you a clear perspective on where price is currently trading to. And this is how you're going to build up the confidence on trusting your own personal bias and to trade whenever prices align with that bias. So whenever you mark out your point of interest, you try to learn how to anticipate price. You read through the tape, learn how to anticipate price. This is one of the key advantage of you marking out a point of interest, understanding how to trade each point of interest. You're not trying to use all ICT points of interest in your charts using the new week opening gap, using the open range gap, or other points of interest which he mentioned. We're just focusing on this specific point of interest, and we're going to be using it from the daily time frame. This is what we'll be using to determine the bias on where we will be trading to going in the week. I mostly use this to determine where price will be trading this week or next week. This helps me to have a clear perspective in price. So gaining that skills, gaining the anticipatory skills of you learning how to anticipate price with this point of interest will be your key advantage in you learning how to trade this simple SMC strategy. For entry, the next point of interest is going to be the 1 hour order block. We'll be using the 1 hour order block for entry. This is the area where we'll be focusing on whenever there's a shift in structure or the 1 hour trend is aligned with the daily trend and there's a clear draw on liquidity. The 1 hour order block will be our entry level. we'll be using the 1 hour order block as an entry level for us to anticipate price to trade, and there's going to be our entry level. Now, the reason I picked the order block, not the fair value gap, is because using an order block in most cases gives you a higher reward to risk ratio. And in this strategy, at the early part of the strategy, focus on big wins, focus on trends, focus on catching up a daily trend where you are holding up that trade for at least a 3 point R plus trade. This will help you have a good confidence and help you in your risk to reward compared with your win rate. Later, you can take advantage of a 1 to 2 hour trade or a 1 to 1 hour trade. Those are the times where you have built up a good trade plan, you have developed on your trade plan, you have a good experience on your trade plan, and you know how to execute it correctly. Those are the times where you take advantage of low hour trades. But first, start with the high hour trades. Use the order block as an entry level. That will give you a higher hour trade. When you pick out the right order block, in most cases, you will be having a high hour trade to take advantage of. So I've used this strategy for a while. I've been trading it for a while. So I understand that using another block will give you a high risk to reward. And at the early stage of you trading this strategy, stick to the other block as your entry level. Don't try to confuse yourself in using a fair value gap or another block. The only downside of using an order block is that in most cases, sometimes you might miss on a trade because price did not retrace to the other block. It used the fair value gap. Now, in those cases, I can say it's okay for you to miss out those trades. The point is that you're trading with the right mindset and you're trading, planning the trade plan correctly. As long as you are applying the trade plan correctly, that wouldn't affect your PNL because you're looking for good setup on a monthly basis on a specific currency pair. You're just looking for 3 good setups. If those 3 good setups are above 3R, a 3R plus, that is a high probability trade plan. And it's something that I've done for months and I know it works correctly. So you learn how to do it. I will just be showing you guys an example. I might do more videos on this strategy if I can get a good reaction from this video. I might do more examples. Going in next year, it will be added to the 2026 FOREX Trading Empire Mentorship Program, which will be completely free on the YouTube channel. I will be adding up this strategy. We'll be teaching it time to time using a weekly range to teach on how you can trade with this idea. You're using this specific point of interest, using the daily time frame, and using the 1 hour for entry. I will be teaching the specific idea on the 2026 mentorship program. Now, I might add up other trade plan, like how to trade every daily candle going in 2026. Just know that this is going to be the major strategy which is going to be teached, which is going to be taught on the 2026 mentorship program. So make sure you stay tuned and make sure you go through the lectures once I start uploading the lecture going in next year. Now the daily time frame of GBP USD. Now this specific trade example is a recent trade I took advantage of on the GBP USD from the date of recording this video. Now I wanted to use a replay to show you guys a past example, but the price was at this daily fair value gap when I was planning on making on this video when I did the first record. So I waited for price to deliver to run the buy side liquidity before actually recording it using a live example so that you guys can easily go back to that example and understand more on what I was trying to explain. Now in this example, after price were expected the breakers block, after price took out sell side liquidity, took out the swing high, retracement, breakers block. After price respected this breakers block, price created a swing high, formed a daily fair value gap, retracement to the daily fair value gap. The next draw on liquidity is to see price respect the daily fair value gap as a support level to run the buy side liquidity. Whenever the daily time frame is ready to expand from a daily point of interest, higher or lower, those are the time you go to the 1 hour time frame to look for your entry. After price retraces to the daily fair value gap, you go to the 1 hour time frame, wait for that shift in structure, take advantage of that trade from the other block as your entry level, and your target should be the daily next draw on liquidity, which is the buy side liquidity. Now, for those that have been going through the live top-down analysis, I have talked about lots of trade. I talked about price respecting the daily order block, trading lower. This was an example. I did a trade review on the specific trade where price did a retracement to the daily order block, respected the daily order block, traded lower to run the sell side liquidity. This was the example I was planning to use because I've talked about it before. So you guys should know that I'm only talking about trades that I take advantage of in the YouTube channel. So price respected the order block, took out the sell side liquidity. Those are the times you go to the 1 hour time frame, you wait for that shifting structure, you take advantage of the trend, trading lower to run the sell side liquidity. You have a clear higher time frame bias of anticipating lower prices. You are only taking advantage of this from the lower time frame. And you can choose to use other lower time frame. You can use a daily delivery, which means you'll be anticipating lower prices. You'll be anticipating a down close candle till you see a run on the sell side liquidity. You can easily use it for daily buyers because whenever the next candle is ready to close as a down close candle, for those that do understand CRT, those are the times to take advantage of those setup. Like on Tuesday, price taking out Monday's high, shift in structure from the lower time frame, you'd be anticipating lower prices to run the sell side liquidity. After price formed the swing high inside the other block, you can see this candle closed below the previous candle's low. CRT continuation. On Wednesday, you're anticipating lower prices. Price traded lower. Closed below Tuesday's candle's low. Next candle, you will be anticipating lower prices, which you can see price traded lower. You just need to understand where is the daily time frame trading to next. In the previous example, I've been going through the trade reviews. I talked about price trading higher. I showed you guys the trade that I did take from the breakers candle. From this breakers candle opening price, where price respected it with a 1 hour shift in structure, traded higher, took out a buy side liquidity, and did a run on this buy side liquidity. You can go to recent live top line analysis and you will find the exact trade setup that I explained this the before and after of this trade trading higher. I still apply the same logic to price respecting the daily fair value gap to run the buy side liquidity. After price formed the daily fair value gap on the 1 hour time frame, price retraced into the daily fair value gap. There wasn't a clear shift in structure for price to run the buy side liquidity after the first swing on Friday, leading to Friday's close. Price closed Monday open, traded higher. There wasn't any shift in structure for me to call a shift in structure for price to run the buy side liquidity. There was a gap in price and price traded above the gap. If this gap were to hold price for price to trade higher, then a run on this high would be a shift in structure. Which price traded lower went below the opening price. Traded higher did a shift, and this was the first advantage I took. So I took advantage of this first trade. After the shift in structure, you can see how price traded above this high, did a shift in structure, and this was the entry, which I was stopped out, but the bias is still the same. I'm still anticipating higher prices for price to run the buy side liquidity, and my entry was the other block, which was around a 5.7-hour trade if price were to respect the other block to trade higher. But you can see price traded through, took out the stop, traded lower, took out sell side liquidity, which was on Monday's low, and price took out the swing low on Wednesday, the shift in structure, taking out this high. After price took out this high, leading to this shift in structure, retracement, or the block. This was the last change in state of delivery before actually running out the swing high, which is another block. Price retraced to the other block as an entry level stop at the swing low, and your target the buy side liquidity. Now, just like this example, there are some times in price where price will not respect your first shifting structure. Now, sometimes it's because of time. When there's a high impact news, price in most cases will accumulate enough liquidity before the high impact news. The shift in structure close to the time of the high impact news is the right shifting structure. But when you trade more of this trade plan, following this trade plan, understanding the trade plan, you will find the same example I just explained. When there is a high impact news in a weekly basis, the shift in structure prior to the high impact news, mostly in most cases, I normally see that shift in structure a day before the high impact news or during the London section before the high impact news. Now, in this example, it was the FOMC, and on Wednesday, which we do know that was the day they do announce their federal funds rates. During the London section, price did the shift in structure. Retracement to the other block was during the New York section, respected the other block, traded higher during the New York section before the initial move and the announce of the federal funds rate led to the impulsive price to run the buy side liquidity. So I will talk more on how you can use high impact news correctly trading this strategy. But first, you need to follow a base plan to start and learn how to execute it correctly. Once you learn how to execute it correctly and you are making sure that you're going through every individual video I do post, I'm going to talk about how you can understand high impact news and how you can apply the idea of high impact news to your trade plan. Now, I did take advantage of this first setup. My idea was that price will run the buy side liquidity before FOMC. But price traded lower, took out the sell side liquidity, and seeing the shift to structure during the London section on Wednesday made it a high probability setup for price to run the buy side liquidity. Understanding this strategy is very easy. You just make sure you watch this video a few times. The reason you're watching it a few times is to write down the steps. Make sure you write down the steps I followed. And I can tell you the step directly that from the daily time frame, first I marked out my point of interest. Then I used the point of interest to understand bias to have a narrative on where price should be trading to going in the week, which is price we're expecting the daily fair value gap to run the buy side liquidity. Second is to wait for the lower time frame to align with that idea. Once price retraces the daily fair value gap, I wait for price to show me that 1 hour pattern, that 1 hour shifting structure leading to higher prices to run the buy side liquidity. Which in this example, the first trade price traded lower, took out my stop, which I told you guys if there is an high impact news that week, you might expect a result like this. Second shift in structure, running up this high, retracement, auto block as your entry level and your target is the buy side liquidity. Remember, you are looking for high impact trades, trades with high arms, high reward to risk. And this is a 4.3 hour trade, covering up this 1 hour loss and still closing up the week with a 3.3 hour profit. So understanding the simple SMC strategy is very crucial for you to have a trading edge going in 2026. I will talk about more on how you can trade this SMC strategy on the 2026 mentorship program. Make sure you stay tuned to that program and make sure you like and subscribe to the YouTube channel. And that is all for this video.